US retail sales drop almost a whole percentage point, surprising the market. Retail sales were down 0.9% in January. That's much more than forecast, and it comes after consumer price data showed a surprise jump this week to its highest in 17 months. Sales had ended 2024 on a high, with consumers buying more clothes, cars, and furniture. So are they tightening their belts after Christmas? Jharonne Martis is Director of Consumer Research at the London Stock Exchange Group. Jharonne, we've been seeing consumer sentiment fall as Americans keep telling pollsters they expect inflation to get worse. So is that why they're reining in spending?
Well, Elena, the consumer has been dealing with high inflationary prices over the last couple of months. So when Black Friday deals came in early in the month of November, it stole a lot of that holiday sales because consumers felt that they were saving a penny in this inflationary economic situation. So as a result, we saw November retail sales were very strong, December. But what was very telling in today's report was the fact that sporting goods saw the biggest decline, both year over year and month over month. And this underlines how the consumer's thinking twice about making those expenditures, especially in the month of January, which traditionally is the month where consumers set up all these goals to start a year fresh with healthy lifestyle and buying the equipment necessary to stay in shape.
Do you think it shows that higher prices for basics like food and fuel are just digging into how much money Americans have for discretionary spending?
Well, it's interesting because our LSEC consumer confidence report shows that there's been a lot of volatility since the election in November last year. And it almost seems like the consumer is waiting to see where the economy is going to land. In fact, even retailers have been very vocal. Of the retailers that already started reporting fourth quarter earnings, about 60% of them have been very vocal about tariffs, and they're concerned that these higher prices will be passed on to the consumer in a time when they're already being very cautious about their spending. And this is definitely reflected in all of our LSEC data, suggesting that for the next 4 quarters, consumers will be very conservative with their spending this year. For the fourth quarter, we saw about a 13% growth in earnings growth rate, and that's expected to decline to single digits and remain so for the 4 quarters this year.
Is there any evidence, Sharon, that consumers are stocking up on goods that might be subject to a tariff before those kick in?
The data suggests that consumers are sticking more to the basic necessities. So even when you look at today's retail sales numbers, a lot of the strength continues to be among groceries and also restaurants and food. Those seems to be the strong categories. Everything else that seems discretionary is suffering because they already purchased those items during the Black Friday deals in November. So the consumer is being cautious in this environment, and they are pretty much sticking to staples. That's where we see the biggest winners as well for this earnings season that kicks off next week.
As you say, we still haven't heard from those big discount retailers for the quarter. Walmart reports next week. We've still got Target, TJX, other big box stores coming up. What are you expecting to hear from those numbers?
So analysts polled by ILSAG are very bullish on Walmart. And in fact, they've been raising their earnings estimates for the discounter. Our StarMine models data suggests that the retailer is likely to beat earnings estimates and post a positive surprise next week. It also has positive price momentum, and investors are not betting against the company. And this comes at the heels of the fact that consumers are trying to save money, and therefore they're flocking to Walmart. As a result, the discounter continues to gain market share as consumers are still buying groceries there. In fact, upper middle class and high end consumers are gravitating there to save more money. And also, we saw that general merchandise was a hit during the holiday season. Traditionally, consumers go to Walmart for groceries during the holiday season, but while they were there this time, they actually splurge on holiday gifts, suggesting that underlining again that for them it's very important to save money during this period of higher prices.
How much of a worry do you think tariffs are for retailers like Walmart who have tight margins anyway?
So for big companies like Walmart and Home Depot, a lot of their merchandise actually comes from the United States. So they won't be hit as hard as other names like Best Buy. Best Buy, over 50% of their merchandise comes from different countries that will be hit by tariffs. The cosmetic company Elf, 80% of their merchandise products come from China. So as a result, this company who prides themselves in lower price points actually might have to increase their price points for their target for their core consumer. So it's definitely gonna affect the US consumer in one shape or another, whether it be electronics, it will be beauty products. And this comes at a time when the consumer is already putting their hands on their pocket and thinking twice about spending money.
That was Jharonne Martis, Director of Consumer Research at LSEG. Don't forget, you can watch more videos on Reuters.com.